I often discuss the importance of comparing mortgage proposals before getting into contract. Now, the timing in which you receive and compare these mortgage proposals is actually even more important. Mortgage pricing can change multiple times daily. Not to mention that the variables that are used to compile your mortgage pricing, like your credit, your assets, your debt to income ratio, etc., are also constantly updating and changing. The importance of comparing your mortgage proposals at the same time cannot be overstated. Now, I recently had a client get a pre-approval from me at the start of her home search. Approximately 45 days had passed. She found a home, executed a contract, then she decided that she wanted to get some additional mortgage comparisons. Now, we had her pre-approved for an FHA mortgage at her contract price point due to DTI or debt to income ratio limitations. Another lender had offered her a conventional mortgage comparison that she preferred. And had I not reached out to follow up on the status of her file, she actually was ready to proceed without a word. She was already ordered her appraisal, and she basically had overlooked the importance of comparing those mortgage proposals at the same time. And because of this, there were a few issues that immediately stood out to me. Number one, FHA, VA, USDA, Fannie Mae, Freddie Mac guidelines are not lender specific, meaning if you meet the criteria, you meet the criteria. So unless a lender has overlays or additional requirements that they place on qualifying for a loan, the approval should be universal. If one lender gets you approved, the other one should as well, unless they have overlays. And because some time had passed since we had updated or reviewed the specifics on her file, chances are that things did change. Number three, even if everything had remained the same, simply comparing mortgage proposals on different days with the same lender and not at the same time can be like comparing apples and oranges, let alone comparing different lenders on different days. This further highlights the importance of comparing those mortgage proposals at the same time. The only way that this other lender could have possibly gotten her approved for something that I couldn't get her approved for was if that conventional mortgage was using different data to qualify her, whether it be updated information or that lender using inaccurate information. Now, after comparing the data that each of us were using, basically by comparing the loan application and fee sheets, I realized that the borrower had significantly paid down a credit card balance. This reduced her monthly payment by over $300 per month, which also reduced her debt to income ratio. Now, not only did this now make it possible for me to get that conventional mortgage approval, but guess what? I was offering the same loan with an interest rate almost 1 full percentage point lower. She had already ordered her appraisal with this competing lender. Luckily, the appraisal had not yet been completed because a conventional mortgage does not require that the lender transfer that appraisal. So she would have lost that money. Had I not reached out to follow up, she would have thought that this competing lender had gotten her a better deal. She would have ended up spending tens of thousands more money than she needed to. And this all could have been easily avoided had she simply made me aware that one of her credit card balances had been significantly paid down. We would have then ordered a credit supplement without having to repull her credit. We could have updated to a conventional mortgage proposal, and she would have still known that she was saving thousands more with me. Luckily, we were able to get it all done. Now, guys, understand that investing in real estate can be stressful and extremely rewarding. Understanding the importance of comparing mortgage proposals at the same time can significantly reduce that stress and increase your rewards. Comment below with your thoughts. Share this video with someone else that it might help. And don't forget to click the bell and subscribe for more real estate and mortgage tips.